give me great pleasure to bring on board Sunil Dsouza, Managing Director and CEO of Tata Consumer Products, to talk about how things have transpired for the quarter gone by. I can see the shelf of the range of products every time they keep on innovating and introducing. Secretly, I was hoping that there would be Bisleri there this time around at your back, but unfortunately that deal's not happened. We'll talk about that, Sunil, but first, good numbers. I've got two brokerage reports in my hand. Both of them are appreciating what you've done in a tough quarter. Walk us through what has worked for you, what has not worked for you.
Nikunj, actually speaking, it's been a topsy-turvy year, so to speak. I mean, geopolitical tensions, inflation, everything that you can think of in terms of volatility, commodity, currencies. But at the end of the year, the last quarter, I think was, we brought it in quite well. 14% top line, 13% EBITDA, 21% group net profit. Even though for the full year, we've delivered 11% top line, 30% group net profit. If you look at our financial numbers, we've got working capital down by 3 days. We've converted 99% of our EBITDA to cash. We've upped our dividend this year. In terms of the strategic priorities, we said 4 million outlets. Now we are 3.8, close to the 4 that we're committed. Innovation is now 3.4. We are in the top quartile of the FMCGs. So in this quarter, if you look at specific businesses per se, India business, beverages, tea specifically, back to volume growth, 1% volume growth, 3% revenue, and margins almost coming back to normalized. Salt, we had taken aggressive price increases, and I think the team executed very, very well. Despite the price increases, we've got 7% volume growth, 24% revenue, and share has gone up by 77 bips. International, we've done a lot of work in the last, I would say about 3 quarters to combat all the inflation and the volatility there. They brought in 6% top line, and more importantly, EBIT for international is just 100 bips off where it was the same quarter last year. So severe cost actions, pricing actions starting to pay off. India growth businesses fired on all cylinders. Again, 58% top line. The ready to drink grew by close to 90. Sampan grew by 35. All in all, feel pretty good about where we are as we enter FY24 and hoping to continue to deliver strong results.
Sometime last year, when we were talking about FY23, the conditions were different. There was a war in the world, commodity prices had reached unprecedented level, tea prices were topsy-turvy, there was no growth, there was contraction. Are you confident that FY24 will be a significantly better year than FY23 in all parameters, growth, volume, margins, international business?
Nikunj, I always tell my team, you focus on what you can control and don't worry about all the externalities that will happen. So we're focused on making sure that we execute our strategies very well. Now, in specific terms, I think most of the volatility has got baked into the numbers, whether it is commodity, currency, etc. We're seeing that volatility come down a bit, inflation starting to slow down. It's not still going down, but I mean slowing down, and all the algorithms that we baked for next year take all those into account. In specific terms, I had said we'll watch for about 1 or 2 quarters before we say that volume growth is back, and I do think volume growth is back. Last quarter, beverages grew, salt, like I said, 7%. So I think the rural stress in India is beginning to come off. I don't think we're out of the woods yet, but early signs, number one. Number two, from a commodity perspective, I think the big moves happened with the geopolitical uncertainty and then crude moving all over the place, having a downward impact on everything else in the supply chain. That I think has got baked in. So salt, for example, now we are seeing more or less flatter costs going forward. Tea was all over the place because we had floods, we had drought, and Sri Lanka went out of the market all of a sudden, again raising prices. I do think this year will be a relatively easier year. Now, again, I'm keeping my fingers crossed there. And international, more importantly, we've taken aggressive pricing and structural costs. So macro environment can't predict. I do think it will be less eventful than last year, but internally we are very, very strongly focused on execution. Just to give you a perspective, right now we're in the top quartile of innovation. We will climb still higher. We said 4 million outlets. We'll be at 4 million, but more importantly, now that we've got a big portfolio, we're going to split our routes for food and beverages in all 10 lakh plus towns. So that will provide extra focus. We're going, our weakness was semi-urban and rural in distribution. We are going to appoint distributors in all 50,000 population towns and going down to 20,000 population towns in some geographies as well. So all in all, I do think this year will be better.
Let's put things in perspective. In a tough year, you've given volume growth. In a tough year, your margins have improved by 70 bips. And that year, like you said, topsy-turvy, tough year to call, lot of crazy headwinds. This year is going to be a good year. In a tough year, if you're growing, in a good year, what will you do? It's a logical question, right? We'll appreciate the spirit of the question.
So, Nikunj, more than anything else, I think I've got a very supportive, but very, I would say, ambitious board as well. So, we've got strong internal numbers. We will continue to deliver double-digit growth and flow that down to the bottom line. And more importantly, we are looking at market share gains as well this year.
No, I was hoping for a slightly more direct answer. In a tough year, which you called as a tough year, you've grown, you've done well. These are your numbers. In your questions, you are calling this to be a better year and a reasonable year. In a tough year, if you're growing at double digit, margins have expanded. In a good year with new products and with new distribution, will this be one of the best years post-COVID for Tata Consumer? That is what I want to understand.
So Nikunj, just in perspective, when my team comes back to me and says we've had our best ever quarter, I said for a growing company, every quarter has to be a best ever quarter. So yes, this year will be the best ever, but that's not saying too much for a company which has high ambitions.
Okay, hi Mr. Dsouza, this is Anisha also joining into the conversation. I just wanted to deep dive when it comes to your beverage business, because while there has been a volume growth after 2-3 quarters of decline, it does seem like that you're losing the market share there. Could you talk to us about what's the strategy going forward for the beverage vertical?
So very specifically for tea, when you look at market shares, you also look at the geography mix. We are stronger in the north compared to the south, and north is where there's more rural, there is more stress, etc. And just from a mix perspective, we've lost share. But even that, to put it in context, for the full year, volume share loss was only 50 bips. So it's not a very significant number, number one. Value was more because we gave up pricing as tea prices came down. Now, two things going forward. Like I said, I expect that tea costs will trend marginally lower if there are no unforeseen climatic things like droughts and floods, etc. That should aid margins, number one. Number two, like I said, I do think we are seeing growth coming back, especially on the rural north belt, etc. And we always had stress on the bottom of our portfolio. We are now seeing volume growth at the bottom of our portfolio, coupled with advertising, coupled with distribution expansions. We remain confident that we'll not only claw back that share, we intend to expand from here.
Okay. Mr. Dsouza, I wanted to also understand what the outlook is in terms of the pace of expansion plans when it comes to Starbucks, because that has clearly been indicated as well in the presentation. Can you just give us more perspective on the capex that's slotted for this and how many stores per year?
So Starbucks, after 10 years, now we've crossed the 4-digit mark, right? We're north of 1,000 crores. Number one. Number two, we added the highest number of stores this year, about 75 stores. And now we are in 41 cities across the country. We will continue to expand store numbers aggressively, going close to the 3-digit mark. Number one. Number two, we ran a pilot to make sure that we are able to pull in more consumers to Starbucks stores. That pilot was extremely successful, and now we will roll it out in significant number of stores nationally. This consists of basically 4 things. Number one is expand the beverage offerings, because not everyone who wants just coffee. So we will have milkshakes, we have masala chai, we'll have filter coffee. Number two is people were not very comfortable with the sizes of coffee there. So we've introduced a smaller pico size that has done very well and not cannibalize the higher sizes. Number three, Indians look for sharing and fresh options, which we have now provided for. And the other thing was in many of the tier 2, tier 3 cities, as we went in, people found the interiors a bit intimidating. So we're brightening that up, and that has a good impact on consumers. So apart from aggressive store opening, we will also have these four parameters play out in a significant number of stores. And we do expect, again, a very high double-digit growth for Starbucks as well.
What about the inorganic growth opportunity? You have 3,400 crores lying on your book. The Bisleri deal is out of the picture at this point of time, but have you completely given up your, your direction to get into the water space? What's the strategy going forward?
So first, I'll talk about the inorganic growth ambitions per se. We've always maintained that Tata Consumer will always explore new opportunities, both organic and inorganic. Internally, we have built a cereal platform, we have built a protein platform, we built a ready-to-drink platform that's organic. But on the organic space as well, we continue to be in discussions with multiple parties, looking at options on how to expand our portfolio, expand our total addressable markets, and grow very aggressively and become one of the top FMCGs in the country. Specifically on the beverage space itself, like I said, Narishco, which is our ready-to-drink business, is now 600 crores plus. Just to put it in perspective, when we bought out PepsiCo's stake in end of FY20, it was 180 crores. So from 180, we've now reached 600, and we're still not where we should be. We're still expanding aggressively. Tata Copper Water doing very well. Tata Gluco Plus doing very well. Himalayan, again, 50% plus growth, and now starting to tick very, very profitably. So yes, right now we will focus on expanding our footprint and our innovation in this space. And I would say in the next 3 to 6 months, you will see an aggressive set of products coming out in Narishco, which will play across different consumer segments.
I want to just, quote a very famous line from Indira Nooyi a couple of years ago, and when she was heading PepsiCo, and she said, we know our missing piece was protein, and they expanded the entire protein business. Is water that missing link for Tata Consumer? Because if you would have gone ahead with the Bisleri deal, it could have been a game changer for your distribution business, your product business, and the profile of the business. I mean, if Bisleri deal does not go through, does your ambition into moving into water business, does that change? Or you would say, okay, I'll give it a skip, I'll build on something else?
So Nikunj, first of all, we aim to be a large food and beverage company. It's not only a ready-to-drink beverage company. So we're looking at expanding organically and inorganically as well across different product segments in food and beverage. That's number one. Number two, I would say it is not only water, it is ready-to-drink beverages. Like I said, we've got Gluco Plus, we've got Fruski, and I'd say watch this space in the next 3 to 6 months. We will be expanding aggressively. Yes, what would have happened with the Bisleri acquisition, it would have given us a jump shift and a very strong third leg in India, tea, salt, and ready-to-drink beverages. But now that is not happening. We're probably 3 years behind. We've just ramped up our entire investments, both in terms of the footprint and manufacturing expansion, as well as the product expansion. So in 3 years, we will be close to where they were.
Sunil, I'm a very happy consumer of Tata consumer products. From makhanas to ragi chip biscuits, I enjoy it all. They are occupying more and more place, at least in our breakfast and on our dining table. But aren't you spreading yourself too thin? From dry fruits to makhana, from salt to pepper, from besan to lal mirch. Aren't you spreading yourself too thin?
Nikunj, it might look from the outside, it might look as if you are spreading yourself too thin. But we are very, very focused on building very, very specific platforms. So one is the core. Second is the pantry platform under Sampann. So all the points that you're mentioning, whether it is makhana, spices, pulses, etc., comes under Sampann. So we are focused on building the Sampann brand. Number three, we are focused on building a ready-to-drink this thing, and it operates separately under Narishco. Number four, we are very, very specific about breakfast, cereals, mini meals, and snacking, which is under Soulful and a little bit under Tata Smart Foods, which is now Tata Yum Side, Sampann Yum Side that we've launched. And we've just sort of wetting our feet in the protein space. Protein space, we've got a long way to go. We're still not putting major money there. We're just testing it out. And the way we are structured internally, organizationally, and the way we go to market, I think we are very, very well poised to deliver on each of these pieces.
Sunil Dsouza takes over Tata Consumer. He fixes a lot of things: distribution, cash flow, product profile, introduces soul food and the product range. But he also promised our viewers and his shareholders that he will bring Tata Consumer at par with what the industry averages are in terms of return ratios. How soon will you fulfill that other promise? As a consumer, I'm very happy. I've got more Tata Consumer delicious products on my table, more tea varieties. I'm perhaps having one as we speak, having it in ET Now cup, a Tata tea. But the shareholder promise.
So two things around that, Nikunj. That still remains a target, yes, and we probably missed a beat on that piece. And like I said, this was a eventful year, and we didn't make progress very much on return on capital employed, for example, and that's precisely because in terms of the inflation which bit us, number one, and number two, the cost items that we had to tackle didn't come through. But as long as we continue to deliver strong double-digit growth, hold costs very strongly, returns will flow to the bottom line. Just to give you a perspective, some of the targets that we had stated, right? Working capital, when we started, we were 59 days. Right now, we are close to 34, 35. Other than headcount costs, where in the India business, we're about 11. Today, we are 5.5. So as we build scale and synergies, we are seeing efficiencies come in. It's just that this year was eventful on different line items of the P&L, and therefore the return ratios didn't come through. But that does remain a target we need to deliver.
When we met last, we challenged you to brew a cup of coffee. Now that the product range has increased, what should we challenge up to you?
You name the beverage, Nikunj, happy to serve you anytime.
Look forward to meet you in person, and thank you very much for your time.
Thank you, Nikunj. Always a pleasure.